So gold and silver closed up big again today. The markets finished down, but not for the same reasons from my perspective that the metals finished higher yesterday and the markets finished lower. We have what appears to be the first, let's say, salvo in the next banking crisis unfolding. All right, before you say, oh, Matt, you're just being doom and gloom and melodramatic, let me share the story with you at a zero hedge. So gold added $118 today, finished at $4,327 an ounce, up 2.81%. Silver finished up $1.14 per ounce at $54.23, up 2.11%. The 10-year yield dropped below that crucial 4%, finished down 7 basis points at 3.975. The Dow dropped 300 points, NASDAQ as well. Okay, so what is going on? And by the way, yes, if you own gold, yes, if you own silver, you like to see, those assets doing well. But when you see gold going up $100 a day, there's a lot of things that are going very, very wrong, okay, for that to happen. Okay, so I am definitely mindful of that. One of those things I'm going to share with you right now out of Zero Hedge about regional, and the title is Regional Banks Crash as More Credit Cockroaches Emerge. And using the term cockroaches, I believe Jamie Dimon used yesterday, or maybe it was Monday, in some comments he made about the next credit crisis, and defaults in this country. Before I jump into the story, as I always humbly ask, please subscribe to the channel if you're not subscribed so we can keep growing the community. So Zero Hedge, just when the market was starting to finally freak out with a 1-month delay about the Tricolor and First Brands bankruptcy, following yesterday's finger-pointing session between JP Morgan's Jamie Dimon and various private credit firms in which both accused each other of harboring more credit cockroaches. This morning it says the credit freakout went to an 11 as 2 regional banks crashed after they both disclosed problems with loans involving allegations of fraud, and evidently completely unrelated to Tricolor or First Brands. That's another whole, hornet's nest that's going to blow up. Added to the concern that more cockroaches are indeed emerging in borrowers' credit worthiness. While those hits can be easily absorbed by the biggest banks, it says the totals are more worrisome for regional lenders. And I will tell you, one of them I'm going to share with you right now is Zion's. Zion stock fell 13% today. I do some business banking with a local branch that is owned by the Zion's conglomerate. So I'm going to be watching this very, very carefully. It says, if JP Morgan has a loan problem with Tricolor, it's puny like Mayo, an analyst at Wells Fargo and Company said in an interview. But if smaller banks have problems with these loans, it takes more of a hit, okay? Shares of Zion's Bank, here we go, plunged 12% after just closed a $50 million charge-off for a loan underwritten by its wholly owned subsidiary, California Bank and Trust in San Diego, and that is my business bank, okay? So I'll be watching this very carefully. Bloomberg reports that Zion said in a lawsuit that California Bank and Trust is owed the money from 2 investment funds tied to Andrew Stupin and Gerald Marshall, among other parties. California Bank and Trust provided 2 revolving credit facilities to the borrowers in 2016 and 17, totaling more than $60 million to finance their purchase of distressed commercial loans, according to the lawsuit, right? Where have you heard that before? The terms gave the bank first priority, perfected security interest in all collateral, including each mortgage loan purchased by the investment funds. But here we go. After further investigation, the lender found that many of the notes and the underlying properties were transferred to other entities. Okay? The idea of collateral, guys, as you know, I'm a real estate lawyer. The idea of real estate collateral, it's very illusory. Okay, look at these guys did something. They basically just transferred, they transferred the properties. Now, with the transfers, would the encumbrances follow? Depends how it's structured. But then, of course, the bank is basically left with no collateral securing its loan. And those properties have already been foreclosed on or were about to be, according to the lawsuit. But it gets worse, as Bloomberg points out that Western Alliance also lent money to the same investor group to them to originate or buy mortgage loans, according to the bank's lawsuit in August. The outstanding balance of that loan is $98.6 million. It's alleged that the borrower created fake title policies by omitting the senior liens. At the same time, the borrower drained funds from the accounts that acted as additional collateral, okay? Basically leaving the collateral worthless, totally illusory. And it says Western Alliance also said it has exposure to the collapse of auto parts supplier First Brands, okay? So it says it'll be ironic if this other bank, WAL, barely survived 2023 banking crisis, only to be destroyed because it failed to do due diligence on its clients a few years later. We always talk about the fact that no lessons are ever learned. Okay, greed always comes to the surface, massive levels of fraud, and what happens is the stockholders, number one, get wiped out, but it's the taxpayers that end up ultimately footing the bill when further bailouts are needed. Okay, so we are embarking on a further mid-size banking crisis in this country, and this doesn't even touch on the fallout from First Brands and Tricolor, which is really being kept hush-hush, okay? And if you guys haven't been paying attention, what's going on in the private credit finance of AI is massive, okay? And a lot of these deals are also with zombie companies, all right? Companies that are given massive balance sheets, numbers, and they're simply haven't even generated a dollar yet, okay? So pay attention to this. If you guys have regional bank accounts, personal, business, what have you, pay attention, okay? Because again, this comes on really quickly. Contagion spreads fast. And look, it's also going to have a knock-on effect for not just the regional banking index portion of the stock market, but the entire stock market, okay, and the bond market. And it's also going to have an impact on other assets as well, like gold, silver, cryptocurrencies, because, as markets fall, you've got liquidity grabs and, people have to sell other assets to cover losses. So let's see how this unfolds, okay? I want to close with an article I'd seen this morning early. I wanted to share with you kind of as a follow-on to yesterday's show about the central banks really being the the leader of this gold run-up right now, okay? And trust me, as they're witnessing now, more banking issues and banking contagion in the United States, it's only going to fuel more buying. I was having a discussion with my friend earlier this morning, Travis from Economic Ninja, and he and I are having a friendly debate about what's going to happen with gold prices, in, like say, the coming months. And my take is that this central bank buying, this changeover, this whole shift in the financial system is going to provide a floor for gold prices. Again, not trading advice, not financial advice. But he seems to think that that the rug's going to get pulled. Love to get your thoughts and comments, on what you see happening. Okay, as gold as another $100 today. Real quickly, this story out of gold, silver this morning: the quiet revolution in central bank gold buying. Over the past few years, it says a quiet but powerful shift has been unfolding in the global gold market. Central bank gold buying has surged to historic levels, quietly reshaping how the world values monetary assets. It says central banks, not hedge funds or retail investors, are now the biggest marginal buyers of gold. This trend isn't a speculative blip, okay? It's a structural realignment that may be setting a new long-term price floor for the yellow metal. Since 2018, global central banks' gold demand has climbed to its highest level in 5 decades. In 2023 and 2024 alone, central banks added over 1,000 tons of gold, a modern record according to the World Gold Council. And it says this steady institutional demand is reshaping gold's long-term supply dynamics. In many ways, it says the current movement mirrors the post-World War II era, except this time it's emerging markets, not the West, leading the gold accumulation trend. And my perspective is, why would that change anytime soon? Okay, as our Federal Reserve is about to embark upon further monetary debasement with further interest rate cuts. Article, what makes this movement so consequential? I like this part, is that central banks buy differently than private investors. They don't speculate, they accumulate. They don't speculate, they accumulate. And another big point, the purchases are deliberate, strategic, and price insensitive, largely insensitive to price, meaning they don't care what price it is. Whether it goes down, it goes up, they're buying, okay? Retail investors, they want to know it's all based upon price sensitivity. If they think that they're getting a good deal, they'll buy it, or if it's a FOMO, they'll buy it while it's running up. But it's all about price. Central banks around the world are not looking at it that way. Okay, it says, meaning even when gold dips, central banks keep buying. The steady bid creates a structural price floor. And that was kind of my thoughts, comments when Travis and I were talking this morning. They said, look at, why wouldn't $4,000 be a price floor for gold now? Maybe it'll be $5,000, but at some point that becomes the kind of the benchmark from which it takes off from there. Again, I'm just talking to you as a layperson. I'm not telling you to run out and buy gold. It's very expensive right now. I'm also not saying that you should be selling gold. I'm just saying pay attention to what's going on, okay? When central banks, the stewards of global monetary policy, global monetary stability, okay, are exchanging their paper assets for tangible metal, it signals a deeper realignment in the global financial order. All right, love to get your thoughts and comments. If you guys enjoy the content, leave me a like. I do believe there is going to be a share, though, unlike before, of money that flows out of paper assets, also probably into cryptocurrencies. I know that's a hotly debated topic, and many of the viewers on this channel don't agree with that. But I don't see the momentum from gold, especially now with the news today of another emerging banking crisis. Come on, you got to be kidding me, okay? How much more can get heaped on the pile? When I met Long again today, I actually had about 3 or 4 other things I was going to share with you, but I'm going to tee them up for the next couple of days, because there's just so much happening. All right. With that being said, appreciate you guys. Please subscribe. Let me know your thoughts, and I'll talk to you all soon. Bye.